to RR Legal Talks. We have two channels, RR Corporates and RR Legal Talks. Today we are going to discuss a complete IPO journey. So introduction to IPO, complete guide for investors, IPO process, eligibility, valuation, GMP, refunds and more. Are you confused about IPOs and how to invest in them confidentially? So want to understand the IPO process and the eligibility criteria and valuation and grey market premium and refund procedures in detail. Then welcome to this comprehensive guide to initial public offering IPO in the Indian stock markets. This is a complete investor education. If you are a first-time investor or experienced trader, this video will take you step by step through the entire IPO journey, how the journey will start and how it will end. From a company's decision to go to public to the final refund and listing. So first I'll explain what is an IPO. So IPO is an initial public offer. So is the process. It is the process by which a private company offers its shares to the public for the first time. This is the initial public offering, first time. So thereby transforming into a publicly listed company. So private company will transform into publicly listed company by offering its shares to the public for the first time. So this will be listing on the stock exchange like NSE or BSE or both. National Stock Exchange, that is NSE, BSE is a Bombay Stock Exchange. So why do companies go for an IPO? So what would be the reason? So to raise capital for expansion, R&D, debt repayments, or enhance visibility, brand value, and market credibility. Provide exit options to early investors like VCs or promoters, venture capitalists and promoters. So example, think of Zomato, Nike, companies that started privately and eventually offered shares to the public via an IPO. This is an example. Then we move on to the eligibility SEBI guidelines. To launch an IPO, company must comply with the Securities Exchange Board of India guidelines, SEBI guidelines, under ICDR regulations. What is ICDR? Issue of capital and disclosure requirements regulations, ICDR regulations. So the key eligibility criteria, we'll talk about the key criteria. So net tangible assets, at least 3 crore in the last 3 years. Operating profits minimum 15 crore. Pre-tax profits in 3 out of 5 years. Then net worth not less than 1 crore in each of the past 3 years. Minimum public offer, if the post-issue capital, if market cap is above 4 crores, then at least 10% of the post-issue capital. So minimum public issue offering generally will say 25%. The reason is for the companies with post-issue market capitalization less than or equal to 1,600 crore. So minimum public offer must be at least 25% of the post-issue capital. And another, at least 10% of the post-issue capital if market cap is above 4 crores rupees. For startups and new age tech companies, SEBI offers with relaxed these norms. Then we'll move on to the process step by step. So appointment of merchant bankers, so known as BRLMs, we say book running lead managers, BRLMs. So first we'll appoint merchant bankers. Then draft red herring prospectus. So that is called DRHP. So which will be filed with the SEBI, which contains all material information. Then SEBI will review and give comments. SEBI ensures transparency and investor protection. And then later RHP will be filed. RHP filing and roadshows. RHP is a red herring prospectus. That is a final red herring prospectus and investor marketing. Then price brand announcement indicates the range within which the bids can be made. That is a price brand. Then opening of the issue, bidding process begin. Typically 3 working days. Then there book building or fixed price mechanism. Book building is the price is discovered based on the investor bids. Fixed price is pre-fixed, pre-decided. Then closing the issue, the last day of the bidding. Then allotment based on the investor category and demand will be allotted. And then refund and credit of shares. Refund will be processed, shares will be credited to the demands. The next is listing on the exchange. Shares start trading on BSE or NSE or both. So the timelines approximately 25 days, 40 days from DRHP listing. It depends on the queries or depend on the comments received from regulatories. So this is what the steps. These are the steps how the journey goes. Then we'll talk about the valuation and pricing. So IPO valuation helps determine the price at which the shares will be offered. So the IPO valuation helps to determine the price at which shares will be offered. Then common methods used for generally used is P ratio, price to earnings, and EV, EBITDA, discounted cash flow, DCF, comparable company analysis. So companies justify pricing in the DRHP using these methods. Pricing is often at a premium to face value. Example, face value is 10 rupees, issue price is 500. Just example. Then what is the role of these analysts and BRLMs? They help in market strategy, demand forecasting. They help in market study, demand forecasting, and investor appetite analysis. This is the role of analyst and BRLMs. And there is the terminology GMP. What is that? Gray market premium. The gray market premium is the extra amount traders are willing to pay in the unofficial market before stock gets listed. I'll give you an example. IPO price is 100. GMP is 50. So the expected listing price is 150. This is GMP is called as a gray market premium. So this is what the extra amount traders are willing to pay in the unofficial market. This is before stock trading. Then this is before stock get listed only. This unofficial market gives that GMP. Then we'll talk about the important notes. This gray market is unregulated. This is unofficial actually. GMP gives an idea of listing gains, but not guaranteed. Avoid making decisions solely based on GMP. Check fundamentals too. Then we move on to refunds. How the refund will see. Not everyone gets allotted shares. In case of oversubscription, many investors receive partial or zero allotment. Then what happens next? Then refunds are processed via UPI mandate revocation or ASBA unblocking. Refund timelines generally within 4 working days after issue closing. This SEBI mandated T+3 listing framework. So always ensure bank account and the UPI details are correct. So the type of the IPO investors. So IPO investors can be divided into like RII, retailer, individual investor. So investment up to 2 lakh. They are called RII, retail individual investors. Then HNI investing above 2 lakh. They are non-institutional investors, NII. Then QIBs, qualified institutional buyers, mutual funds, banks, insurance companies. These are all comes under QIBs. Then anchor investors. Pre-allotted shares before IPO opens. It gives for QIB confidence, anchor investors. Then allotment quota varies. This per category. See, retailer gets 35%, QIBs 50%, NIA is 15%. So total 100%. So what are the risks in IPO investments? So while IPO can provide a quick returns, there are significant risks also. The first is overvaluation and speculative pricing. Listing below issue price, it happens. And limited business history, locking for promoters, but not for returns. GMP based hype without fundamentals. So always read the DRHP and evaluate financials, business model, risk before applying. IPO application process for investors. So we will discuss how to apply for IPO online. You can apply UPI enabled broker platforms, the Zerodha, Grow, Angel One, etc. Many are there. Or net banking ASBA is there. What is ASBA? Applications supported by blocked amount. ASBA facility, net banking too. So the key tips are apply early to avoid the technical glitches and use correct UPI ID and ensure significant funds in account. Check for mandate approval within your UPI app. So now the conclusion is the final words for smart IPO investing. Investing in IPOs is exciting. You get to be a part of company's growth journey from day one. But treat IPOs like any other investment. Do not do your research first. Please do your research, assess valuations, understand risks, and don't get by listening others and don't get saved by market noise. If you found this content helpful, please like, share, subscribe for more such financial educational videos. We have two channels, RR Corporates and RR Legal Talks. So now the disclaimer is this content of this video is for informational and educational purpose only. Does not constitute financial investment, legal or tax advice. So this video is not intended as a recommendation to buy, sell or subscribe any securities or financial instruments, including even IPOs. So viewers are advised to consult with a qualified financial advisor before making any investment decisions. So this video, and I am not responsible for any losses incurred as a result of reliance on this information provided here. So all investments are subject to market risks. So read all offer documents. That is my suggestion. Read offer document carefully before investing. Thank you. Please subscribe RR Corporates, and we have other channel RR Legal Talks for more updates on corporate laws and public issues, insolvency, and particularly IBC matters. Thank you.